Everybody, and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 16th of December. So this is the last full week of trading before Christmas, and last week we had the conclusion on two major events which had been driving market sentiment for some time. So namely the US and China trade deal, or that phase one of that trade deal, and the conclusion of the UK general election, hopefully giving some kind of political stability for the UK going forward, and also a clear direction for the Brexit process as well. So let's take a look at a few markets here that we're keeping a close eye on going into the start of this week. Now, if we come and have a look at the Dow here, first of all, the Dow Jones futures contract has pushed on to all-time highs, again being supported by the positive news of the US and China trade negotiations. And if you recall from earlier on in the month, even when the market sort of came down and sort of tested the 27.40 level, when we broke the daily trend, I was saying then that December is typically a strong month for US equities, be it whichever way tends to happen. Amazingly, this month tends to be historically a very positive month for US equities, and it seems to be the same has prevailed this month as well. So if we take a look at this on the daily time frame, we can see that the markets have rallied on strongly from the 27.40 level. There are a few signs, though, of sort of weakness coming in, a few little concerns sort of coming in, and that is on the recent high here. The market's pushed up very strongly, and there is a bit of weakness starting to come into the momentum indicators as well. So that's sort of showing signs of, possibly a bit of weakness coming into the strength of this move. Having said that, that's only on the daily time frame. When we come down to other time frames and start to look at the quality of trends on some of the mid time frames, for example, we can see that we've got a relatively good structure here, and the market's sort of pulling or sitting nicely above this 27.160 level at the moment. So the way I'm looking at this is that we've got a very strong market. There are that slight concerns of sort of weakness coming in, but we've got the market sitting at the moment, or price sitting on at the moment, on top of that 28.160 price point. So if the market sort of breaks underneath 28.160, then we've got that level down here around that 28,000 level, and that's quite a big key number for for market sentiment. So if we see a break underneath 28.160, wouldn't be at all surprised if we get a test down here towards that 28,000. As long as the market's holding above this price point, I'll still be looking for long opportunities and looking for continued pressure to the high side. Now, if we come and take a look at oil, last week we were looking for oil to push up to the $60 level. The market's now achieved that, and so the question is, what now? Well, if we come and have a look at this on the weekly chart, you can see the $60 level here. You can see the reasons as to why I was expecting the market to test this price point. It's such a strong price point, and the market's sort of tested this so many times before. Above 60 does actually start to look sort of rather reasonable for, possibly sort of moves up here, maybe even towards sort of 63.40. There's quite a bit of free space above the $60 level, but it is quite a significant price point. The market needs to really sort of test this and get it out of its system if it's going to advance higher. From the fundamental perspective, things look positive for oil. We've had the Saudi IPO. We've had a lot of information out that supporting higher oil prices going into the sort of near future. So technical structures here looking sort of positive, as well as sort of fundamentals from a stronger oil price. So here on the daily time frame, for example, trend structures starting to open up a little bit. Not the wonderful trends on the daily time frame, but they certainly starting to look a bit cleaner on the sort of mid time frames. Again, I think that the time frames that we'll be focusing on for opportunities will be more down towards these mid time frames, like the 4-hour time frame. I'd like to see a break through the $60 level, some kind of put retracement and rejection of it as well. So that looks for sort of positioning above that sort of price point, and that means that the $60 level sort of acts as support rather than interfering with any kind of resistance into the sort of positioning of it either. So still looking for long opportunities here on the oil, as long as the market can get above that $60 price point. Now, if we come to Forex markets and take a look at one of our favorite ones that we're keeping an eye on at the moment is Kiwi yen. Now, the Kiwi has been a popular market for us a long time, basically because of the strength here of the Kiwi. Now, the markets on Kiwi yen here has sort of broken out just sort of through this price point here around on the weekly chart. You can see that there's support and resistance around this sort of level. The market's just sort of above that price point at the moment. But again, continued opportunities above price here puts it into a new trading window, and there really looks to be sort of some decent size sort of opportunities above the market from where it is. The daily time frame looking particularly nice structured trend as well at the moment. And we've got that sort of 72 price point, which has been key support and resistance, which is acting as a bit of support here for the market at the moment as well. So our focus is really on the mid time frames to intraday time frames for positioning. Again, we're looking for stronger prices on the Kiwi, and Kiwi yen being one of our favorites at the moment, with the particularly with the weakness in the yen coming forward. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.